podcast where we put you on the map. This is Ron Costa broadcasting from the lovely state of New York. We're doing a mobile podcast again today, and we're going to be talking about ways of quick cash, actually, quick tips on raising capital. And to do that, let's introduce Vicky Hutchmala from the World Token Market. Vicky, how are you doing today?
I'm great, Ron. I'm so excited. It's been a long time since we did a podcast, so this is fun. It's exciting, and we're talking to one of our favorite people, one of our guests today that we like very much, very informative, and I think it's going to be great, so we might as well get started.
We are starting this new season off real strong, so let's continue that, and let's introduce Mike Brette, the CEO of Small Cap Equity Advisors. Been on the show many times. Mike, how are you doing today?
I'm doing very well. Thanks for the opportunity, Ron. I enjoy these podcasts.
They're great. Yeah, they're really great. And like I said in the last podcast, every time we have you on, Mike, it's like everybody's like, well, you got to get that guy on more often. So you're the first person we went to for the new season, and there you go.
Good.
So we're in our second episode, and we're really psyched about having you on. And I know we've got a lot to talk about crowdfunding-wise and raising money. So before we get started, as usual, let's give a quick overview of Mike, of what you're doing and how you got into the business and everything.
Yeah, I've been in business 30 years, helping companies raise capital, go public, either OTC market or NASDAQ, or if they want to uplist to NASDAQ. We've done that several times. So, and we also are consultants and advisors to companies, so we can steer them in the right direction. I get a lot of emails and phone calls on a weekly basis from people that just don't really know how to raise capital. So one of our services we provide is counseling and kind of set them in the right direction. And we've been, like I said, we've been in business 30 years. We have a lot of contacts with investment banks and family offices, broker dealers. And we know how to do things the right way and make sure everybody gets started on the right foot. That's kind of what I'd like to do in the show here today, is kind of offer some insights to companies or individuals who are either raising capital for the first time or maybe second or third time, but they're not sure how to do it legally.
Yeah, a lot of times these guys have not been successful the first time, or they're scared, or whatever it is. They need this information, and there's a right way to do it and the wrong way to do it. So today let's take everyone through the right way.
Yeah, the first thing that people need to consider, the first thing they need to consider, and they need to talk to their security lawyer, is what does the SEC consider to be a security? That's the first thing, because I get a lot of calls. Well, we're offering a convertible note. We're offering promissory notes. We're offering this. We're offering that. So it's not a security. Yes, it is. If you read the SEC information, almost anything under the sun, if you're selling some kind of interest to somebody in exchange for money and they're relying on you to make them a return, that's a security. So the reason I bring that up is there's only two ways of legally raising capital. You either have to have a direct registration with the SEC, or you file one of the exemptions under the Jobs Act, like Reg A plus, Reg D, or Form C. Those are the only two legal ways. You have to have a registration or file an exemption. And I get this all the time from people. Well, we don't want to do that. We're trying to raise money, not spend money. We don't have an attorney, on and on, one excuse after the other. And it's either, look, you pay now to do it the right way, or you're going to pay a lot more later on because you did it the wrong way. So, people think they can use a business plan or a deck and, send that out on social media or email and then take checks from investors. That's illegal. You can't do that. So those are some of the elements that, I tell people about or discuss. And the second one is the first rule you have to understand in raising capital: there are no investors or groups of investors waiting out there to write you a check. It's a myth.
If only.
It's something. Yeah, it's something that the internet, puts out, or people read in the media, or something where they get this idea that there's somebody out there willing to write you a check, even if they don't know you. That is not correct. Investors are smart, they're educated, they know what they want, and it depends. You have to give them what they want. You have to structure your deal like they want it. In other words, the reason they have the Jobs Act with Reg A Plus is there's liquidity in there for the investors right from the get-go. In other words, if they invest in a Reg A Plus offering, they're getting free trading stock, which if they run into a bind financially 6 months down the line, they can sell that without any further effort on your part, the issuer. They can sell it and exchange it, do whatever they want to get liquid again. And most other offerings, you can't do that. So there are some rules that people have to follow and be aware of so they can discuss it with their attorney.
Well, let's talk about that a little bit more. First of all, you mentioned how is it a security? That's referred to as the Howey test. Is that right?
Well, that's one test. That's mainly for tokens, cryptocurrencies, and things of that nature that a lot of people have been snagged with the SEC. They use the Howey test, which basically says, look, if you're putting money in and somebody else is going to work a deal to make you money, yeah, that's a security. It needs to be registered. But what I'm talking about is in general and specific terms, if you're out there raising money, the SEC does not care what you call the offering, and they don't care what your lawyer called the offering. The SEC says it's a security. We're coming after you. You didn't file a registration or an exemption from registration. We don't care what you have to say. I mean, you can call it anything you want. And the SEC is going to say, no, it's a security. And they usually win 99% of the time because, if you've done it wrong and haven't followed the rules, you're going to have a real problem with state and federal regulators. So the Howey test is one for crypto and tokens and things of that nature, but it still holds true for any other type of offering. If you're selling equity in your company, or if you're giving somebody a convertible note, which converts into equity, that's a security. If you're selling promissory notes, LLC interests, on and on and on. I mean, the list is almost endless what the SEC calls a security, but you'd be surprised how many people out there trying to raise money who don't have a clue that they're violating state and federal security laws.
Yeah, unfortunately, I wouldn't be surprised about that because I see it all the time as well. But all these guys think that they found a quote loophole, right? You hear that all the time with these guys. Yeah. Now, when you say the SEC comes after you, what can they do? I mean, obviously they could shut you down or whatever, but is there fines?
Yeah, well, all of the above. If the state regulators and the SEC, if they decide to come after you with an enforcement action, depending on the level of violation that you have, they can close down the offering, number one. There's a right of rescission for investors, which means every investor that put money into your deal can cancel the investment and demand their money back. The SEC can also file civil and criminal charges against all the officers, all the directors, any kind of finders that you might have used, any board of directors, anybody involved with aiding and abetting the violation of a security law can be, snagged in the net that the SEC puts out there. Now, the SEC can't prosecute criminally, but they can refer it to the attorney or the U.S. attorney in the specific state if they want to. The list goes on and on of what they can do, but it really comes down to how egregious was your violation. They could, like I said, they could just file a civil complaint against you, but they'll close your offering down for sure, and they're going to make you give back all the money. Now, the problem with most people raising capital, if they raised $1 million, they've already spent $1 million. So if you're required to give the money back to investors, you don't have it. So that's another problem you got to face. So they have security laws for a reason, to protect investors. That's the main importance of security laws, is to protect the investors. You have to give a disclosure document to them. You have to disclose all material information. You have to make it clear and understandable what they're investing in. And even under like Reg D 506, you're not required to have a PPM. But I mean, that statute says that. But I don't know of anybody out there, any securities lawyer or professional, who doesn't insist on a PPM, because a PPM puts everything down in writing. What the risks are, that the investor signs it and says, I understand the risk. I can lose all my money. I can survive without the money. I know I'm not entitled to a refund. Blah, it goes on, and you're disclosing everything. So to try to go out there and raise money without a proper registration or the proper documents, I mean, you're just playing Russian roulette.
Right.
Yeah.
You know, Mike, we know that there's under the Job Act, we know that there's Regulation A, Regulation D, and Regulation CF. I would imagine that each one of those platforms is geared towards certain industries that can use them better to their advantage. Why, can you tell us the difference between those three and who is more, which platform works for which industries so they can choose?
Yeah, good question. Let's take the crowdfunding Reg CF first. That really is for a startup trying to raise, let's say, $250,000 to $500,000, even though they're allowed to raise up to $5 million under the new regulation. The crowdfunding CF is really for startup. The main reason is, first off, you have to fill out Form C, which is like a mini prospectus. The form is supplied by the SEC. That's a disclosure document that has to be filed. And then once the SEC gives you the green light, you're required under the statute to upload your business plan, your Form C, videos, any sales information or collateral material. You've got to upload that to an SEC-approved funding portal. And under Reg CF, you as the issuer cannot raise capital through your website or meetings or anything like that. It all has to be raised through the platform. And your ability to advertise is very limited under Reg CF. You can put out a tombstone ad, and you can you have to give the link to the funding portal. And so the investor looks up the link, goes to it, and then the financing has to be closed by the portal, and investors get restricted stock. So that's kind of an overview of a CF. Now, Regulation D 506C is relatively new with the Jobs Act. It allows companies to raise capital, an unlimited amount of capital, and investors receive restricted stock, and we'll go into that in a minute. They have to file Form D with the SEC, which again is just about a 4-page document. There's no approval of that. There's no fee, but they have to file that within 15 days of getting their first check. Now, the reason some companies prefer the Reg D 506 is they can also advertise and market to the general public, but they can only take capital from accredited investors. Non-accredited investors are excluded. So what you're doing under that is you're eliminating about 90% of your investor pool, because most people are non-accredited.
Right.
And so the accredited status is very sophisticated individuals, high net individuals, institutional money. So under Reg D, you kind of eliminate a lot of your potential investors. Now, Reg A kind of takes up the slack of all those other two offerings I just mentioned. Under Regulation A, once you file Form 1A with the SEC, again, which is like a mini prospectus, but it's very detailed, the SEC qualifies the offering, which means you can start taking money. prior to the qualification by the SEC, you can start advertising and marketing your Reg A to accredited and non-accredited investors. So now you've got a wide pool of investors to look at your deal. But prior to it being qualified by the SEC, the only thing you can do is get indications of interest from investors. You can't take their checks. You can't take any money until the SEC qualifies. So the importance of that is, if you do it correctly, you can get a lot of interest in your offering. And then when the SEC qualifies the offering, you can go back and contact those investors and then say, okay, we're ready to go. Here's some more information. Let's talk about a deal investing money. So Reg A allows you to advertise and market to the general public, to accredited, non-accredited investors. You can raise up to $75 million every 12 months with a Tier 2 offering. And, the investors get free trading stock. The other side of that is, if you decide you want to go public, you can use Reg A Plus as a vehicle to get listed on OTC or NASDAQ, if you can qualify. So I prefer the Reg A offering. It costs a little more in legal fees, and you have to have an audit if you're going to do Tier 2. But in the long run, you have a lot of benefits to Reg A over crowdfunding, CF, and over the Regulation D offering.
Well, Mike, it appears from what I have observed, limitedly observed, it appears that the primary reason that crowdfunding launch isn't successful is because people don't realize how difficult it is and how absolutely you need to have expert advisors and consultants to take you and help you get to where you're going, because you can't do it on your own, and you can't do it if you don't market yourself so people are excited to invest in you.
Yeah, that's a good point, Vicki, and that's the big myth that's out there. A lot of these companies let me give you some statistics. First off, 90% of startups fail in the first 12 months, and the rest of them fail soon after. 60 to 80% of companies fail to raise money in 12 months. And the reason the failure rate is so high is these companies do not understand the process of raising money. Like I said at the top of the show, there are no investors out there waiting to write you a check. You need to find your own specific investors for your specific deal. Just because somebody invested in something doesn't mean they're going to invest in everything. So if you're approaching technology investors and you've got a cannabis deal, you're wasting your time. So you've got to go after and find specific investors who are interested in your sector. Now, how do you do that? Well, first off, you don't buy a list of investors. You see it on LinkedIn and all these social media sites.
Yeah.
We have a list of 500 investors you can buy. Well, there's thousands of people that will fall for that and buy that list. And all they're going to do is spam people on that list. And those people are going to get really upset that they're receiving all these cold, generic emails saying, hey, I got a deal, invest in it. That doesn't work. It's a waste of time and money. What people have to do is they have to, like you mentioned, Vicki, they have to have a marketing budget, a PR budget. They need to put out press releases. They need to do podcast interviews like we're doing here, television interviews, YouTube videos. They need to get investors interested enough that the investors are contacting them and requesting their package or their information. And that's how you raise money. These companies that have raised money have a built-in network of vendors, and people that they know that they can raise capital online. Now, the other misnomer is that these funding portals can market your offering for you. That's absolutely false. The SEC does not allow a funding portal to market your specific offering over anybody else's. What these funding portals promote is we have 40,000 investors. No, they don't. What they have is 40,000 people that signed up on their website to look at deals. And they're going to look at thousands of deals, not just yours. So getting back to your point, Vicki, if somebody's trying to raise capital under Reg A, Reg CF, or Reg D, once they file all the legal paperwork and the filings and everything like with the SEC and the state, they need to have a marketing budget to reach out to investors and make them aware of what they're doing and about the offering. Without that, they're going to fail.
Exactly. Because you can't do, no matter how great your company is or your product or whatever, if nobody knows about you, nobody's going to invest in you, and they're not going to invest in you if they know about you unless you've touched them in an emotional way that gets them excited, that gives them an anticipation to not only invest with you and use Reg A, D, or CF, but that will cause them to tell their friends and associates and their connections and relationships, look at this great deal. So, if you don't do that in the first place, you're not going to get that in the second place, and nobody can do it for you. We've found in the podcasts that we've done, and we've done about 200 of them, our guests are CEOs and founders of companies because they are the ones who have the most passion about their company to be able to sell it to whoever is listening to our podcast. If you're the owner, you're the one with the most to lose, so you've got the most passion to sell your company, not somebody that you hire who's promising you the world. They're not going to do anything for you because they got 10,000 other people they promised the same thing to.
Right. Well, the other thing, too, is investors. I've been doing this for 30 years, like I mentioned at the top of the show. Investors do not invest with strangers. If they don't know who you are, if they've never met you, they're not going to write you a check for $500,000 or $1 million. Just not going to happen. Now, the companies that do these crowdfunding online, they're taking minimum investments of $100 to $500. Yeah, all right. If that's what you want to do to raise a few $100,000, it might work if you have a proper marketing budget. But if you're trying to raise some serious money, $5 million, $10 million on up, investors are not going to write you a check because of some online information that they saw, or an email, or even a Zoom meeting. Like I said, I've been doing this 30 years. I've never invested in anything where I haven't met the founder. I talk to their vendors, talk to their employees. I visit their location, and I look at their checkbook, their bank statements, not just financials, but the bank statement. I want to know where they're spending money, where their checks are going. I mean, are they buying a brand new BMW or, condo in Mexico as opposed to running their business? So I look at the checkbook. So the reason I bring that up is due diligence is key. So a lot of people trying to raise money online are just fooling themselves that they're going to raise any substantial. Now, I know I see it all the time where somebody's raised $5 million and $10 million. That's an exception to the rule. It's not reality. So for 90% of the companies out there, if you're trying to raise some serious money, you're going to have, number one, a marketing budget to get investors to contact you. You're going to have to fly to meet the investors or have them come out and see you if that's what they want to do. You're going to have, and this all requires a one-on-one meeting. These pitch events that you see all the time, angel pitch events, come in, pay us $5,000 and you could present to hundreds of investors. That's a bunch of crap. I've gone to those meetings, and the reason I've gone there is to meet other investors, not to invest in somebody pitching me. I go there to meet.
To build up your relationship.
Yeah, well, the investors.
Although, Mike, sometimes they do have good lunches.
Yeah, they have in the cocktails too. Yeah, but I mean, like I said, I've been in this 30 years, and I've gone to a lot of those pitch meetings, but only to meet other investors and to discuss current deals that we're all involved with. None of us ever write a check to somebody who pitched us at a meeting or soon after the meeting. It's just a complete waste of time. You've got to do this on a one-to-one basis, in person, if you're trying to raise substantial amounts of money. Like I said, $500,000 to $1 million or more from one investor. It's not going to happen over the internet. So to Vicky's point, marketing is key. Dealing with professionals is a key element, and getting the word out there so that investors trust you. If they don't trust you, they're not going to invest with you. They need to know. Yeah, they need to know how you're going to make money so they understand how they'll make money and get the return to their money, their investment capital. So there's only one way to do that. That's face-to-face, shaking hands, looking somebody in the eye. Investors do not want to be pitched, and they don't want to be sold. Like I mentioned early in the show, investors are educated and they're smart. They know what they want. So all this junk that you read on the internet and some of these social media sites is just that. It's junk. It has nothing to do with reality. It's somebody trying to sell a course or a list of so-called investors, but it's not reality.
Right. Agreed.
It kind of takes advantage of ignorance, doesn't it?
Oh, yeah. I mean, well, people think raising money is quick, cheap, and guaranteed and easy. And that's another myth out there. It's not. It's none of the above. You've got to spend money to make money or to raise money. In other words, you got to pay legal fees, you got to pay accounting fees, you got to pay PR fees, marketing fees. And you'd be surprised. I get contacted weekly for people that are broke, that don't want to spend any money, they don't have a legal offering. Number one, they spent a few $1,000s to get a fancy deck put together, and they think that's the tool they can raise money with. You can't. It's illegal. The other thing is they think they can hire unlicensed finders to go out and source capital and then pay them a commission or a success fee if the finder gets an investor. That's another myth. It's illegal. First off, unlicensed finders can't do anything. They can't post anything on social media. They can't send any of your material out to anybody. They can't email anybody. They can't call anybody and discuss your deal. And they cannot advise somebody that it's a good deal. And this is the big element. They can't conduct due diligence. I see this all the time. Well, I have a finder who's doing due diligence. I say, is he a licensed broker-dealer? No. I said, he can't conduct due diligence. So the point of bringing that up is why mess around with a finder when you run afoul of state and federal security laws using a finder? I mean, right. Those are at the top of the hour. I answered Ron's question. If the SEC comes after you, what can they do? Well, if you use a finder and he's not licensed, not a broker-dealer or investment bank, you got some serious problems, not only for you, the issuer. Of course, the finder can be sucked into it also, but other investors who got into the deal working with that finder, they also face problems. So it's a can of worms. But to your point, Vicki, people are out there trying to raise money. They don't know what they're doing. They think it's fast and cheap and guaranteed financing, that if they put something up on the internet or social media or a portal or whatever, that the money's just going to flow in. It's just not reality.
No, and it's a sad thing that so many people fall in that trap.
Yeah, well, you know what, Mike, Mark Cuban never returned my email. Mark Cuban. So you're right.
Oh yeah.
He doesn't know me. Yeah, but yeah. I mean, do you think that like shows like Shark Tank and things like that, and all these things that you see online with these quote success stories, I think it contributes to the idea that it is easy to do, and I think that's what a lot of people get.
Yeah, I hear that all the time from potential people. well, we tried Shark Tank or something like that, and it just doesn't work. I mean, Shark Tank's there for entertainment. That's really it. And I haven't even watched the show except just clips here and there. And I mean, to me, it's entertainment. It's not reality.
It's exactly.
Investors, real investors, do not advertise that they're investors. It's almost like a closed, I don't want to say secret or anything like that, but investors don't put the word out there like, hey, I got $10 million to invest, send me your deal. They don't do that.
They don't need people to know.
That's typically a finder, and somebody doing factoring or bank loans or somebody else. It's not a real investor. So again, to Vicky's point, people are just uneducated and ignorant. I hate to use that word, but that's what it comes down to. And when I try to point out to them what they need to do to stay out of trouble and what it's going to cost to do it with legal fees and accounting and everything, it's like, oh no, I know somebody that did it didn't do all that. Well, wait a minute. Okay. Just because somebody did it, violated security laws and got away with it, doesn't mean it's legal. Just means they haven't been caught yet. It's like robbing a bank. You rob a bank and get away with it doesn't make it legal. You haven't been caught. So to me, it's not worth it. The Jobs Act is there for a reason. Security laws are there for a reason. You need to, if you're raising capital, you need to follow the rules, and that requires paying the price to get out there and raise the money. But it's not a guarantee. I mean, I get a call from somebody, and they say, "Can you guarantee that you'll raise us $5 million?" No. I said, did the lawyer that put together your PPM and charge you $25,000, did he guarantee that PPM is going to raise you money? Well, no. All right. There is no guarantee. But if the one guarantee is if you don't try to do it, you're going to fail. So, I mean, you need to get out there and take the first step. And again, having a proper legal document, complying with state and federal security law. And this is the other. When I say state, if you're raising money, each state has a blue sky requirement that you have to file in the states you're raising money and where that investor is located. Now, under some offerings like Reg A, there are exemptions from the blue sky. You just have to do a notice filing and pay a small fee, a few $100. Other states require a review of your offering to make sure it complies with their state security laws. And, that review process can go on and on. So there are state requirements in addition to federal requirements. And again, you'd be surprised how many people don't realize that. And there are states out there like Texas, Florida, New Jersey, I think Alaska. There's about 7 or 8 states out there that you as the issuer cannot raise money. It all has to be done through a licensed broker-dealer. So if you're trying to raise money in Texas and Florida and New Jersey, you're out of luck if you're trying to do it yourself. That's when the state will come after you for operating as an unlicensed broker-dealer. So again, rules are there for a reason. Follow the rules and enjoy the ride. Raise the money, build your business, and get on with life. Quit looking behind you.
No, absolutely. That's right. I think we scared straight a lot of the issuers who are probably listening to this podcast. But it's
I hope so, but I hope so. Yeah. I hope so, but I doubt it. I could just see the eyes rolling. If this was television, people would say, "Oh God, listen to this guy go on." I don't have to do that. I know people that didn't do. Yeah, well, go ahead,
but yeah. Yeah. So, before we close this out, Mike, I got one more question for you in terms of, you mentioned videos and press releases and things that you're supposed to do the right way, right? All right. So when you create these press releases and you create the videos and all these other marketing ideas, they got to go somewhere, right? They got to be, where do people go to actually post these things? Do they just go to a major PR service, or do they go to YouTube, or what's the right way to do that?
Yeah, that's a good point. I mean, well, first off, there are public relations firms out there, investor relations firms that can take on the job of not only producing your media pieces, but also getting it out there to the public. Like Fox. I've had clients to be on Fox Business, interviewed on Fox Business on TV, and press releases. I don't do the press releases, but I work with the company and their lawyers to, craft the press release and make sure it has all the right information in it, no fluff and everything like that. And then video, like YouTube, you can hire a production company to produce a nice video, and then that can be emailed. If you have a list of people, you can email it to them or post it on social media. So there are a lot of avenues out there for distribution, but a lot of companies don't know that. I mean, they don't have a clue that, they need to do that. I mean, I tell people again, how is somebody supposed to write you a check if they don't know who you are, if they don't know what you're offering? I mean, without exposure, you're just wasting time. Even if you put all the legalities together and have an offering, if you don't have a marketing budget to reach out to investors, you're just wasting your time.
Yeah, I had a contact tell me the other day that they just produced a promotional 5-minute video on their latest offering, and he sent me a link to it, and I looked at it, and I felt like telling them, you should put this in the CVS pharmacy under sleeping pills.
Yeah.
It was really. I mean, come on.
Well, a lot of people, a lot of entrepreneurs, founders, are terrible at public speaking and at doing a video, and if they should hire a professional to do it. And again, a lot of these companies, they think they can just put anything in a video, true or false, a fluff piece or a fact. They can just do anything, and you can't. Yeah. You've got to be straightforward, factual, transparent, and everything with your information you're putting out there. And again, that comes back to the PPM and the legal documents that you need. Those are disclosure documents that tell the investor what they're getting into. If you're doing that, but you're also putting out a video that says the opposite, that, hey, this is guaranteed, we're going to pay you 30% interest, we're going to do this and this. If you go on and on your video and it's not in your PPM and it's not disclosed, I mean, you got a real issue there with regulators. So, there's a right way and a wrong way to do marketing and promotion. And again, some of these online platforms tell you that they market your offering. Again, they don't. What they do is, once you sign up to do their platform, they'll refer you to somebody that markets for them. But that's a separate fee. People don't realize that. For every $1 million you're trying to raise, you have to have $10,000 to $15,000 as a budget for every $1 million you're trying to raise. And if you don't, you're going to fail.
Yeah, speaking of talking to professionals, Mike, how do people get a hold of you? What's the best way to contact you?
Yeah, I mean, they contact me on my phone, 951-236-8473. They can email me, mikebrette@gmail.com. They can go to my LinkedIn page under Michael Brette, see my profile, and look up, how we do things and what we do, and they could contact me through LinkedIn as well.
Yeah, I think I'm going to title this podcast "Listen to this podcast or go to jail."
There you go. Yeah, and that rings true in a lot of cases because, I mean, I can't emphasize it enough. And when I talk to people, it just goes in one ear and out the other. And then, then I see on the internet the SEC closed down this, they closed down that. They're going. I mean, you see it all the time in the SEC bulletins of closing people down for not having a registered offering. So it happens.
Exactly. So this was really good information. Vicki, you want to close us out with a comment or a question?
Yeah, this is great. You want to have a successful business, you got to do certain things. You got to take the high road. You got to operate with integrity at all times, no matter what. You have to be passionate about what you're doing, about what your business represents and the product that you have. And most important, absolutely most important, hire expert professionals, lawyers, financial advisors, CPAs, to help you be successful, because you cannot do it yourself. It's the purpose of Mappable USA. We do podcasts to teach our listeners the right way, to give them the opportunity to contact the experts and professionals that everybody needs to have a successful business. And Mike absolutely is one of our best guests, because he is an absolute expert when it comes to raising money, and he can help you. He has the right ways to do it. You need to call him, and you need to ask him to help you, and you'll be successful. It's a no-brainer. Just do it. And we love you, Mike.
Thanks for that. I appreciate that. I enjoy doing the podcast, too. So anytime you need a guest, just give me a call.
We will.
Absolutely.
And, Mike, thanks. Thank you for being a guest on today's show. And Vicki, thanks for co-hosting this with me. And folks who listen to the Mappable USA podcast at MappableUSA.com. Just go to our website, scroll down, you'll see all our syndication sources, and just pick the one you like best. Subscribe, and you'll never miss another one of our episodes. Want to be a guest on the show like Mike was today? Fill out the guest tab there. We'll see what you can do about getting you on the show. And if you like what you heard today, send us an email at info@MappableUSA.com, or just leave a comment on whatever page you listen to this on right now. So thanks for your support. Thanks for listening. We'll be at you next time with another Mappable USA podcast. Have a great week, everyone.